The EU referendum, according to the opinion polls, is too close to call, as illustrated by the most recent opinion polls and resulting momentum analysis that literally puts the vote on a knife edge. However, the same does not hold true for the bookmakers or financial markets that are apparently assuming that a Remain outcome is a done deal, which is set against my forecast conclusion for Brexit. And this is from someone who correctly called both the 2015 general election that the pollsters got so badly wrong and the 2014 Scottish referendum, as illustrated by numerous videos on this YouTube channel. This opinion poll's momentum chart clearly shows a trend since mid-May of Leave gaining ground against Remain, which by the start of June had both virtually neck and neck into the 13th of June, when Leave started to pull strongly away from Remain, right up until last Thursday's horrific event that literally resulted in momentum being put into reverse gear for Leave, that led to Remain taking a marginal polls lead that appears to have evaporated in the final day of campaigning to give Leave a marginal lead going into today's polling. So it's no wonder that most political pundits are sat on the fence, having called the referendum as being too close to call, as now both sides are virtually neck and neck, with the marginal advantage to Leave within only a few hours until the polls close, though with momentum in Leave's favour, which means that Leave should be continuing to improve as people are going into the polls. Where the financial markets are concerned, the British pound has leapt higher to the top of its trading range for the year, with the latest trade at 147 that is indicative of a market that is apparently strongly discounting a Remain vote outcome, as the uncertainty of the past 3 months appears to have evaporated. Similarly, UK stocks, as illustrated by the FTSE, have sharply bounced back in recent days from a 3-month low, whilst UK bonds have in fact been trending in the opposite direction of that implied by increasing risks of a Brexit vote, which is indicative of both central bank intervention and safe haven buying, with the most recent rise in the 10-year bond yield to 1.31 indicative of flows back into the stock market and other risk assets. Overall, the UK bond market is showing none of the signs of what Operation Fear has been warning of, i.e. that for a sharp rise in interest rates, which even if Brexit happens, clearly does not look probable. So, with the polls so evenly balanced, why are stocks, bonds and sterling so relaxed about the referendum outcome that could yet see Brexit happen? Exactly what message are the markets sending us? Is it that the opinion polls are once more badly wrong and that instead Remain is heading for a sizable victory, or is it that the outcome of the vote just does not really matter, as much of the threats from Brussels and promised withdrawal from a single market will soon evaporate as the UK more or less just ends up tweaking its membership of the EU rather than exiting the EU? That is what the markets are saying is going to happen, i.e. not much is going to change. Whilst the bookmakers' odds are, just as the markets, strongly discounting a Remain outcome, where for instance Betfair's odds in favour of Remain have now greatly improved from 1.6 a week ago to 1.29 today, whilst Leave's odds have widened from 2.6 a week ago to 4.3 today, again reversing earlier momentum in favour of Leave that now gives Brexit an implied probability of less than 20% and thus conversely Remain on implied probability of about 80%, which in trading markets terms is very high. An 80% probability for a particular outcome is very high. So where the bookmakers are concerned, a Brexit is very unlikely. And finally, my forecast conclusion on the basis of a sum of a year-long analysis that includes over 120 articles and over a dozen videos that concluded that the most probable outcome was likely to be Leave winning on 51.3% against Remain on 48.7%. in terms of trading the markets, and despite the markets apparently no longer treating Brexit consequences seriously, a case of whatever happens, it will be business as usual. Nevertheless, a Brexit outcome will result in sharp downward swings for sterling and FTSE, even if the moves prove temporary, as the politicians and central bank officials are likely to respond to both with market-soothing words of "nothing has really changed," and of course the Bank of England releasing tens of billions of more market liquidity support. So, taking account of my forecast conclusion for a Brexit outcome, then the current stock and forex markets are offering the potential for a good risk versus reward short-term trades. However, remember that volatility will be high, which means that even if one gets the direction right, then if the stops are not set wide enough, then traders can get stopped out of their positions before the profit-making moves take place. Or that if Remain does win, then the market may gap well beyond one's stops, resulting in larger losses than the potential that had been allowed for. And so also are the bookmakers, giving what appear to be decent risk-reward odds of 4.3 to 1. So Friday definitely looks set to be a very interesting trading day. Your analyst is hoping that if Brexit happens, he does not get stopped out of his short trades before the profit-making moves take place.